What's up everyone, it's Scotty with Money Investing. In this video we are going to be talking about Jeremy Siegal from Wharton School of Business, who recently talked about artificial intelligence, the bubble, and market breadth. So I'm going to break all of that down in this video. As always, if you enjoy this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. There is a 16% annual discount available till the end of this month, so just 3 to 4 more days available for that discount. And of course, we have the 60% off on fundamental and technical analysis courses, coupon code MEMORIAL, if you want to take advantage of that as well. That does expire after tonight because it's in observance of Memorial Day weekend. Now, I did a video on artificial intelligence a couple days ago talking about whether the AI is in bubble or not. And I personally shared my opinion and my thoughts and pretty much mentioned that I personally do not believe that AI is in a bubble just yet, right? Because the companies that are actually driving this change, the companies that are actually moving this innovation, this technology, are very, very strong established companies with strong profitable numbers, great free cash flows, excellent balance sheets. And yes, the valuations have gotten a little bit way too out of hand, but I still don't believe that we are in that bubble territory yet. Well, guess what? Jeremy Siegal with CNBC had an interview and he agrees, and he says it's not a bubble yet. Wharton's Jeremy Siegal predicts big tech boom fueled by AI. So one professor and renowned economist Jeremy Siegal is bullish on big tech and boom fueled by artificial intelligence, despite the concerns of a bubble. And AI chip craze driven by demand for AI-powered chatbots and high-powered graphics processing units used to train such chatbots on supercomputers has seen investors piling into certain stocks, with some raising concerns of a bubble as well. Economist David Rosenberg pretty much mentioned that this is going to be a very similar AI boom and could collapse like the late 1990s dot-com stocks. And Jeremy Siegal says it's not a bubble yet. And he also mentioned that first, there was excitement about AI Nvidia, and ratified that excitement with blowout earnings. That's a double push. And in the long term, I would say that Nvidia shares were probably slightly overvalued, but for the short term, we know momentum can carry stocks far higher than their fundamental value, and no one can predict how high they might go. And this right here is another thing. So Wharton Siegal also mentioned that AI stocks have helped lift the S&P 500 overall, and that it could become a winner for the banking crisis. He says, and I quote, "As we all know that the top 8 or 9 companies have accounted for all the gains in the S&P 500 this year, and that 490 stocks have been flat or down." That's true. Like I mentioned this before in my previous videos, the market breadth is really not that great. I mean, if you come take a look at the S&P 500, obviously we are higher from October lows. We are up a little bit over 20%. But then if you come take a look at the percentage of stocks that are trading above or below their moving averages, for example, this chart, which is a good representation of how many stocks are trading back above their 200 SMA, is now at 41%, meaning majority of stocks, almost 60% of them, are trading below their moving average. In fact, we are seeing these lower highs as opposed to the S&P 500, which is making a flat or slightly a higher high as well. And the same thing is true for the NASDAQ. You can see the NASDAQ is very much making a higher high right now over here. But if you come take a look at the NASDAQ's breadth, that's even worse, because percentage of stocks making a 200-day trading above their 200 simple moving average at 44%. So again, 56% of stocks, majority of companies are trading below their 200 simple moving average, and this right here is the weaker breadth. So Jeremy Siegal also mentioning that, yes, the NASDAQ was oversold in 2022 and it did bounce back, but I think AI has pushed those big cap tech stocks even higher. And remember, big cap stocks for any sort, whether they're tech or not, don't have to worry about the credit conditions. Yes, they have to worry about interest rates. The credit conditions are going to affect the small and mid-sized companies, and the S&P could actually become a winner from the banking crisis as well. So that's where we are. That's the thoughts from Jeremy Siegal as well. And I think I for the most part, fully agree. I don't think we are seeing a little bit of a bubble territory right now, because like I said, a lot of the companies that we are seeing that are pushing higher, 7 to 8 big tech, large cap tech companies that are driving this innovation, driving this change, they're very well established. This is nothing like the dot-com bubble. AI, in my opinion, is going to be revolutionizing tech. It is here to stay with us, and it's going to probably take off like wildfire in the future. And one more thing that I want to mention is that it's not really so much about predicting the future, because nobody really can do that. And I just finally finished the book. The most important thing took me a while to read because I like to read and write at the same time. So I was taking notes. But in that book, what you'll notice is that if you read it, by the way, I actually believe that the most important thing by Howard Marks should be a required reading for all investors. For all investors, it should literally be a required reading for everyone who's participating in the market, because that book is so well written and it's got so many key lessons to take away, which I'm going to be doing a video on our main Money Investing Reads channel. We'll be talking about that book and kind of doing a summary on all the lessons and the key takeaways. But in that book, Howard Marks very simply says the markets are like a pendulum, right? Something that we have discussed in our previous videos multiple times. By the way, a lot of the things that were discussed in that book, we have already talked about, right? Let the price come to you. Wait for the opportunities to come to you. Markets are like a pendulum. They swing back and forth between being overvalued and undervalued, and primarily because of market emotions, human emotions, and of course, because of the fact that markets are not perfect. They are not accurate. They're not correct. Most often prices are indeed wrong. And he also mentions that it's not so much about predicting the future, but really having that self-awareness and understanding of where we are in the present. That's really far more important than trying to predict the future, because nobody really knows what the future holds. Nobody can predict the future with any certainty. That's why all these market economists and forecasters are almost always wrong, because you can't predict the future on a more consistent basis. So what Howard Marks is basically telling us there is look at the present, look at the situation around you, and what do you see? Do you see optimism? Do you see pessimism? Do you see greed, fear, bullishness, bearishness? What do you see from a psyche standpoint? And I was reading this chapter today and it was quite interesting, because right now I can easily say there is a lot of optimism, there is a lot of greed, and there is a lot of bullishness in the sort of this sector. Tech's starting to become really, really overcrowded because we've got too much money, too much capital chasing too few stocks at the moment, which is, look, it's not a bad thing. If you are a tech stockholder, it's not a bad thing. I'm a tech investor for the most part. My biggest positions, Meta, Tesla, Google, Amazon. They've been doing great, but it's just that realization and awareness that at some point, there is going to be a time where this is not going to go on forever, right? There's another chapter called cyclicality, and understanding that these moves don't last forever, right? It's not going to keep going up forever. Nvidia is not going to keep going up forever, right? At some point, we're going to have the last buyer at the top, and eventually everyone who wants to own the stock will already do. What happens after? That's the real question. So I just want to make sure that we are on the same page with that understanding that these cyclical trends don't happen forever. They don't go on indefinitely, right? Just like the markets can't keep going down forever, they can't keep going up forever. And of course, talking a little bit about artificial intelligence as well, which I don't personally believe that right now we're in a bubble, and Jeremy Siegal seems to agree with it. But valuations are starting to get a bit more stretched. So if they keep going higher, that's where we need to be more and more cautious, because as prices go up, risk goes up with it. So I hope you guys enjoyed this video and a complete update on this particular topic. Just want to, again, put a caution out there, warning out there. I know people don't like that very much because markets are very much in optimistic mode, very much in buy mode. So just, I'm here, voice of reason. That's all I'm doing. Hope you guys enjoyed this video. Find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. And let me know your thoughts down in the comment section below with respect to the market environment that we're currently in. What are you doing? Are you buying, selling, holding? Let me know in the comment section below. As always, happy investing. I'll see you all in the next video.